much money do you think your company loses due to CAM slippage every year? It may be more than you know, and easier to remedy than you realize. Before we dig into CAM slippage, let's get clear on exactly what CAMs are. CAM stands for Common Area Maintenance. This falls under the M in TMI, the taxes, maintenance, and insurance that cover a property or building. Property managers of multi-tenant properties typically recover the operating costs for shared common areas separately from the base or minimum rent. Slippage is the difference between the total operating cost of the property and the amount recovered from tenants. It represents the often preventable losses incurred from various sources. There are key reasons you're suffering from CAM slippage, falling under voluntary and involuntary reasons. Let's look at the voluntary reasons first. Going over budget. The budget is the blueprint for how much base rent and operating costs your tenants should pay you. You want to hit your property budget exactly. Otherwise, the annual reconciliation statement and accompanying invoice for the shortfall in their installment payments will surprise your tenants. Property managers may look for ways to avoid such confrontation, choosing to take the loss. With CRESSblue, correct budgets are automatically built based on previous expenses. Nothing is missed. Unallocated costs. As we know, annual reconciliations of additional rent can help catch unrecovered expenses. But this assumes that all expense allocations are already entered and allocated to each site. If they are only looked at annually, it can be difficult to figure out what the invoices are for and who should be paying for the expense. Examples include invoices with mismatched data, without a service address, with unclear services descriptions. In cases like these, property management companies often take voluntary slippage on sloppy paperwork or lose out on disallowed expense claims as a result of a tenant's expense audit. With CRESSblue, expenses are correctly and immediately allocated. Difficult CAM breakdown calculations. CAM allocations are very complex. How exactly do you calculate variable expense gross-ups, partial expense periods, area gross-ups, and rentable area changes? Most property managers fall back on lowball estimates to include a lower than actual amount of the expense in the CAM statement. That will surely be acceptable to the tenant. With automatic calculations done for you, this type of CAM slippage is easily avoided. Now, let's look at involuntary CAM slippage. Missed expenses. Vendor expenses are often unintentionally missed. One-off expenses are easy to miss in manual spreadsheet-based systems. Credit card receipts typically do not have enough information to identify the items and do not include a service address or a tenant name. These often end up being paid but not recovered. Lease language. Leases often contain language that lease administrators don't actually understand. As a result, they never utilize and realize the benefits of many of the lease documents' negotiated terms. For example, leases often allow for the grossing up of variable costs to account for disproportionate usage when the subject property is not fully occupied. Yet few administrators actually separately track the variable expense portions, nor process the recovery of these costs solely from the occupied areas. They end up allocated as vacancy expenses rather than additional rent. This is just one example of common lease terms that are often misunderstood, resulting in lost recoveries. For more examples, read our article, What Are CAMs and How to Avoid CAM Slippage, or message us. Asset tracking. While similar to the lease language issue, this one deserves a separate mention due to the solution's scope and the large cost recoveries that it implies. Leases typically allow the landlord to include asset amortization in additional rent. This necessitates asset tracking. Capital repairs and replacements need to be added to the property's asset value and amortized over that equipment's expected lifetime. This then needs to be added to each tenant's operating costs recoveries for their tenancy period. But many landlords aren't aware that this should be done. So, what's the solution? CRESSblue uniquely eliminates CAM slippage. It supports budgeting and expense allocation, calculates the CAMs, eliminates missed expenses, utilizes your lease terms, and tracks assets. The financial losses due to slippage are often more than the annual cost of using CRESSblue. The extreme automation will surprise you. The efficiency will impress you. Say goodbye to cam slippage. Hello, CRESSblue. Book your CRESSblue demo for a guided tour of its powerful automation capabilities.